Good afternoon, everyone. Welcome to this webinar being presented by Towers Business Development, preparing business plans for your business or organisation. I'm Peter Towers, the Managing Director of Towers Business Development. If you have any questions during this webinar, can you please type your question into your computer, into the chat box, and I will attempt to answer the questions later in the webinar. If you're watching this webinar on a live feed via Facebook, welcome, but unfortunately you cannot send a direct communication to me with any questions. So if you have any questions, could you please send me an email, peter@towersbusiness.com.au, and I will get back to you with the response. And if you're looking at this video recording at a later time that suits you a bit better, or over the weekend or whenever, and you have any questions, please contact me, peter@towersbusiness.com.au. Business plans. What do you do with them in your organization? Why are they important? Let's look at some of the reasons. I think they're like maps for tourists. If you're a tourist, you generally plan where you're going to go, don't you? You plan what your trip's going to be. You try to calculate how long it might take you if you're driving, or if you're flying, of course. You'll be lucky. Not much flying going on around Australia at present. But if you're driving, you will estimate how long the journey is and how long it might take you, and you probably plan where you're going to stop for a cup of coffee every 2 hours. You're probably also taking into account roadworks and perhaps dropping in to see a friend on the way. So you're going to have a fair idea what time you're going to reach your destination. So you know where you're going and you will know when you get there. Are businesses any different? I think this is one of the real controls around a business, is knowing where you're going and knowing when you get there. You need to be able to identify the strategies for the future of your business or organization. Now, a business plan is the place for recording strategies. It's another job altogether, implementing strategies. And that's another webinar. And if you like, I'm quite happy to talk to you about that. But at this stage in a business planning process, you're going to identify strategies for a whole range of things, which we're going to talk about in a moment. A business plan should not be prepared by one person in isolation. You shouldn't hire a consultant just to prepare a business plan on their own. I do work as a consultant for the preparation of business plans, but I always try to get the leadership team to meet with me 3 or 4 times during the business planning preparation process, and most certainly to have them review the draft of the final document before we sign off on it. I think it's also a good idea to have the whole team brought together. It doesn't work in every business because people might be scattered all over Australia, or there could be some reluctance of the leadership team to bring the total team together. But I think you can get some great feedback, and I'm going to talk about some of that soon, by bringing the team together and listening to what they've got to say. So where do you start? I think the best place to start is with a SWOT analysis. What are the strengths, weaknesses, opportunities, and threats of your business, your organization, your church, your sporting club, or whatever that you're wanting to prepare a business plan for? Because they all need business plans. Don't let the word business mislead you. You can call it strategic if you like. You could call it the organization plan or the club plan or the church plan if you wish. But basically, it's a business plan. Because at the bottom of all this, all these organizations are businesses. The next item I'd be starting on is the competitor analysis. And both of these items, the strengths, weaknesses, opportunities, threats, and the competitor analysis, could be conducted with the whole team, but definitely it should be the leadership team sitting around the table or in the room, having a whiteboard, writing the aspects up on the website. So let's look at competitors. Who are they? What's their strengths? What's their weaknesses? What opportunities does your business have to compete with them? What do you think their strategies are going to be in the next couple of years? How are you going to compete with them in those strategies? Are you hearing rumors that a big competitor is going to come into your market? If so, what are you going to do about it? You're going to sit back and just cop it? Or you're going to immediately plan now to implement strategies to get you onto a stronger footing, to be able to combat their competition. That's how good businesses operate. They think through and try to anticipate what are the changes going to be in the landscape in the next couple of years. And one of the biggest changes or potential changes in the landscape is competitor action. So where do you start? I think you start with some team meetings. This is the general work team. Bring them together, have a discussion with them, get their feedback. I think it does wonders for their morale. And ask them some questions. What's good about this business? Now, this might take a bit of softening up, opening up to get them to communicate. And if there's any hostility in the business, it might be a good idea if the big boss made an opening comment and then went away for a while. We really want them to tell us what they think. So what's good about this business? What do customers say to them? Are the customers happy? Or are they only dealing with this business because there's nowhere else to go in your town? That's not very good if there's a competitor likely to come. What do you think of the products and services that the business is making? Do you buy them yourself for your own household? Do you buy them as consumer goods or as food? Or is it clothing? Do you wear it? Do you get involved with the products and services produced? Are you happy with your training? I've heard people say, what training? Well, that's a real problem if that's the response, because businesses these days need to be continually training and retraining their team if everyone's going to keep up with what's happening in the broader marketplace. We are now competing with the world, and we need to remember that. Do you believe that you have got long-term prospects with this business? If they say no, I think management should be saying why. Is it because they feel they're not being trained? Are they not being recognized? Are they not being rewarded? Were they properly inducted in the first place into the business? What caused that resentment? Because that represents a waste of human endeavor, that employees, but also the leadership team and the other people that were involved in conveying information about what you do in your business to that person. And I like this question because I must admit, for a while, you can sit there for 5 minutes and no one says anything. And then sooner or later, someone will open up and it can then lead to a conversation. If you were the CEO or the owner or the general manager or whatever the title is, what changes would you make? And sometimes you'll get some interesting feedback on this. And it's not all on team member benefits. It might be on a better service for a customer or a group of customers. It might be opening up the communication channels. It might be improving social media or even adopting social media. It's well worth asking that question. This is one of the reasons I like getting involved in business plan preparation, because I act as a facilitator. And in lots of cases, I think you need an outside facilitator because it makes this questioning a little bit more third party. It's not the boss asking these questions. It's someone else that they don't really know, unless they happen to know of me and the community I live in. So you can probably get away with a bit of leeway. So think about it. Team meetings to get you started on a business planning process. But the main group in the development of a business plan is the leadership team or the management team. I like the terminology leadership because that's what they're there to do. They're there to lead, more so than manage. Lead, encourage, develop their own team, train them. That's what leaders do. So the first thing is we need some quality time so that they can sit down, no telephones, no mobiles, unless the place is burning down, no urgent distractions. So that they've got their brain in gear, thinking about the future, thinking about the type of business or organization or sporting club or church that they want to have in the next 2 to 3 years. I know some people talk about 30 and 40-year plans. Well, we'll leave that to the big end of town. I think if we can think up to 3 years, get that right, continually review it each year, make adjustments, you'll have a very good culture built around planning for your business or organization. So you need some quality time, probably in 2-hour lots. If you can get everyone to agree to be there for half a day or even a day, that can be great. But some people get bored, even the leaders sitting around for that long. They're thinking about what's going on back at the office or back at the workshop or back at the sporting field or whatever their involvement is. So I like the idea of 2 to 3 hours stretches and then let them go and bring them back again. And as I said at the beginning, one of the key aspects of doing a business plan, of preparing a business plan, is to develop strategies. What is our strategy on competitors? What is our strategy on recruitment of team members? What is our strategy on training team members? And embedding that within the business plan. It's another job to work out how you're going to implement that. And that then might be training manuals, it might be videos, it might be a whole range of things. Don't let that sidetrack you at the beginning. You need to identify the strategies, and it's a separate exercise, and it might be a completely separate group of people that then has the responsibility to implement those strategies. Don't get bogged down. We want ideas in the development of a business plan. So developing the business plan, well, we need to know the current financial position, and we need the leadership team to say that they understand it. They can read the financials. Financials are being prepared accurately each month for an individual business unit, and key performance indicators are being prepared. And the leadership team sitting down and analysing these results once a month in a business review meeting. That's the perfect situation. And that's what I hope is happening in your organisation. And I don't care whether it's a club, a church, a sporting organisation, a business organisation, a company. That's the process that I'm recommending you should be doing. That's what the big end of town do. And they've had hundreds of years of working in this environment to prove that in the main, that works. What's the history? It's always good to have in your business plan an overview of the history of the business. I've just finished preparing a business plan for a company that celebrated its 50th anniversary last year. That's great to be able to record a bit of the history in the business plan. And the founder's still alive. He's no longer a director, but it's great to be able to record that and put a little bit of the history of the business. Leadership team roles. I normally call them portfolios, but it's a bit like a cabinet post. And in the material that I use, that I've developed, which we sell to accountants throughout Australia, we've identified 40 to 50 portfolios that someone in an organization needs to be responsible for. And it shouldn't all be the CEO or the owner or the boss. I think they should be spread primarily amongst the leadership team, but some of them will go to other people who have got particular expertise or experience in a particular area. So think about and we're going to be looking at a number of the roles as we go through in this presentation today. Professional development of the leadership team is very important. What's going to be aimed for? Are they intended to undertake the Institute of Company Directors Diploma course? Do they need to know more about corporate governance? Have they got trouble reading financial accounts and therefore need some training in that area? Do they need to improve their ability, or some of them, to speak in public and to use Zoom? Do they need to understand social media better so that they can use this new resource to be able to communicate? These are some of the things you might think about in professional development, and I think they should be noted in the business plan. This is the strategy that we're implementing of what people are going to do. Let's look at the team. How are they engaged? What's the employment process? Who does the interviews? What's the agreements look like? Is the induction process carried out satisfactorily, or do you get a lot of people resign after the first 3 or 4 months? I think a lot of that goes back to the induction process or the actual engagement. Was the job oversold? Is it not as good as what was made out in the interview? Or was the induction process no good? Were people just literally thrown in the deep end? Now, I know I'm tempted to do that at times, but it's really not good leadership. Have they been trained appropriately since they got there? Have they been included in the training program? Have they been told what is expected of them? Obviously, what's the retention rate? Because it costs a lot of money to restart the process, to go back to try to employ someone else, to then induct them and train them. And what's the succession? And succession here is the whole team. And to achieve succession, I think you need to have ongoing training, which is encouraging people to move up the ladder. That if someone started as a junior, they're able to undertake some training and personal development areas so that they can be moved into another position without the business having, or the club having to continually go to the outside world and bring someone else in. That can breed a lot of resentment within the organization. So what's the succession strategy? Who are your clients and customers? What feedback do you get from them? Do you have customer advisory meetings when someone sits down and regularly talks to the customers? Do you have regular sessions where customers or clients can just turn up and tell you what they think about your product, your services? It's a good idea to communicate with them because you can get feedback on your competitors and find out what's going on, because competitors are emailing or mailing your clients and customers all the time. What are your products and services? What's the market think about them? Where are you getting them from? Are they coming from overseas? And if so, is that a reliable supply chain? Should you be developing alternative supply chains? Or what improvements are needed in your products and services? No one can stand still in this world anymore. You'll get knocked over by someone coming up behind you. I think businesses need to be continually looking at their product. And the same thing applies to sporting clubs and other organizations. Why do people join your particular football club or baseball club or a cricket club or whatever? Why don't they join another one? What's the benefit? So what's your product look like? And what improvements need to be made? Marketing. When I first became an accountant some years ago, marketing was not a very high priority. I was the chief financial officer, company secretary of a public company that at that stage had been on the Sydney Stock Exchange for about 40 years. And we had never employed a marketing manager. I was there when the marketing manager turned up. And I think he got a shock. But he took us back to the very beginning. And what we found was an organization running in the 3 eastern states. Every office had different letterhead designs, and some of them had different wording for the company name. Proprietary in some cases, spelled in full, in other cases PTY. Different colors being used, even for our top quality products that we were producing. And we were sending them to markets like Japan, which are very conscious of how you portray yourself to the market, and especially colors mean a lot. So marketing has changed a lot over the last 30 or 40 years. What's going on in your business on marketing? Do you have someone in charge of marketing? Doesn't have to be a full-time marketing person. Do you have a virtual marketing person externally? We talk more and more now about virtual chief financial officers. I think virtual can be put in front of a number of other key advisory positions for the CEO and the leadership team, and one of them is marketing. What about social media? What about your website? What about your general communications? This all comes under marketing. So what strategies are you going to nominate in your business plan? Suppliers, I partly touched on that when I was talking about products. Where do your suppliers come from? Is this a secure supply line? In the last 2 years, we all know that there's been problems getting supplies from places all around the world. Look at the time taking now for new car deliveries. But what about key products that you need so that you can be selling them? Do you need to develop an alternative supply market, perhaps in a different part of the world? Move a whole continent and set up an arrangement where you're going to get 30 or 40% of someone else, just so you've got a real chance of continuity if something goes wrong in your supply chain. Competitors, I've already talked about competitors. I don't think we need to revisit them. I obviously made a mistake including them again, but they're very important that you understand them. Don't ignore them. Research and development. We've just gone through 2 years of COVID problems. Many businesses, I suspect, have been undertaking research and development. This discussion today is primarily aimed at SME businesses. Have you been undertaking research and development? If you had someone sitting on a computer working out new products or services, or if you had people working in the foundry, on the shed, or in the workshop, well, you can claim a research and development tax rebate from undertaking these services. It can be very worthwhile, but you need to have a documented approach to what you've been doing. So if that's one of your strategies, it should be noted, and you should be talking to your accountant, or you could talk to me, because we have a specialized product which we write to assist accountants in understanding research and development. You have to be a company to claim it. So this doesn't apply to sporting organizations or some of the others that might be watching this video, but it applies to businesses. Now, if you're currently a sole trader and you've been tinkering and you think that what you've been tinkering with could be a great product, I think you need to talk to your accountant about getting incorporated as a company so that you can avail yourself of the opportunity of being able to claim the research and development rebate, which for a company with a turnover under $20 million is 43.5% of the research and development expenditure to claim in your tax return. That's well worthwhile. And you can get that as a cash payment if in fact you are trading at a loss, as long as the loss exceeds the amount of the rebate calculation. Protection of intellectual property. If you're undertaking research and development, I hope you're developing intellectual property, because otherwise, why would you be spending this money to develop a product or a service? And if so, you should be thinking about how you protect that intellectual property. There are people called patent attorneys who can look at registering a patent, but there are other ways of protecting your intellectual property. You should be talking to a commercial lawyer about activities such as trademarks, confidentiality agreements, and other ways of protecting the intellectual property you've developed. Risks. Well, we've had a huge risk. I wonder how many people identified COVID-19 as a risk 2.5, 3 years ago. We have had various viruses included in risk strategies over the years, so you may have had them in your list, and that's great. Hopefully you were able to implement some of your strategies that you had developed. But there's a whole range of risks. In fact, our manual on risk management for SMEs includes about 30 risks that could apply. Doesn't necessarily mean they all apply. And there are risks associated with every aspect of a business, built around your team, your customers, your competitors, your products, your leadership team, your board of directors. So it's well worth making sure that they're going to be looked at in the development of your business plan. Communications. I ran a webinar last week with a communications expert, and we looked at it. And he said the best communication that businesses have is word of mouth. Well, that's great if you've already told your customers or your staff, your contact people what's going on, and they know it, and they can then go out and spread the word. But that doesn't always happen, does it? At times you need to be making sure you've got communications working wherever it relates to in areas such as social media, newsletters, website development. That's the sort of communications you need to be looking at in your business. So in the business plan, you would be noting, are you happy with these activities or is changes needed? Succession, we've looked at succession, and you understand that succession does apply to a CEO and a senior executive. Obviously, if they're leaving, that's a big position to fill. But also, please look at every person in the organization. Are they going through an annual training program so that if need be, or if the opportunity arises, they can be moved up into a higher position in your organization? It will save a lot of money if you don't have to continually go to the market and try to hire new people to fill gaps in your organization, if you have a policy of developing your own, and you will have very keen employees. The board of directors and board of advice is also an important consideration within the business plan. How often do they meet? How do they get reports? Who prepares the agenda? Hopefully the secretary with the company secretary with the chairperson. Are minutes prepared with an action plan after every meeting? Very important. And who follows that up? Is it someone internally or do you have someone externally? I do that sort of work for organizations. And then do you make sure all the reports are submitted so that the directors and the leadership team members receive the reports for discussion at a particular meeting 3 days before the meeting, so that they've got the opportunity of reading that material, thinking about it, thinking about how it's going to affect the business, the club, the organization, so that when they turn up for the meeting, their brain's activated, it's in sync. You've got some points to raise. You've written down some questions. Nothing worse than seeing people turning up for meetings and then opening the board reports as they turn up, and obviously reading them for the first time then. So it's a challenge to make sure that these people, these very important people, directors and board of advice members, do get their information in time to be able to read it, absorb it, and then come up with suggested policies. Corporate governance. Whenever we talk about directors, we need to be mindful of corporate governance, but corporate governance also applies to the leadership team, and I think it should apply throughout an organization. What's corporate governance mean? A lot of this can be documented within a business plan. This is how this business is going to operate. It's some of the matters I was just talking about. minutes, action plans, follow-up, timetable for distribution of material before a meeting so that people have read it. But it applies to other things also. It's courtesy within a board environment or a company environment that if you're involved in a contract or a matter that's been discussed, you declare your interest. And in many cases, you'll be asked to leave the meeting while the meeting considers that matter. I was involved in a business organization meeting, and sometimes 3 or 4 of the directors to be sitting outside because a matter that pertained to each of them was being discussed. So the board was reduced back to about 3 or 4 people. That way, the organisation is seen to be abiding by what is the general concept of corporate governance. The people who are involved in a matter that's been considered by the organisation do not participate in the discussion. They're invited back in when a decision's been made. One of the other key areas is the leadership team and the directors should be asking about quality assurance. This is the internal checking to make sure that everything's happening the way the business plan and then the implemented strategies say it should happen. It doesn't always happen, of course, does it? But the quality assurance system is there to try to assist these activities to be performed appropriately throughout the organisation. Liquidity reports prepared monthly, very important for the directors and the leadership team members, but for everyone. This is, are the payments being made to organisations like the tax office and for superannuation and loan repayments all being made on time? And what is the general position? What is the debtors days outstanding? Has it blown out? Has it gone from 43 days to 70 days? If so, what's gone wrong? It might have meant that the invoices weren't promptly mailed out, or they didn't have due date for payment stamped predominantly on them. What else was wrong? So liquidity reports. Part and parcel of a business plan should be predictive accounting reports, and this covers the budgets for all the internal organisations. They can then be consolidated into one, but it's very important that they're prepared for the individual units within your business, because they can then be used for accountability back to the person that's in charge of that activity. Cash flow forecasts that are linked to the budgets, and then the projected balance sheet, so that you can read the business plan and then read the financial picture. This is what this business is going to look like in 2 or 3 years' time, based on the decisions that you've made in the business plan. This is the financial story, the cash flow story, if you like, the balance sheet story for a business or an organisation. I've mentioned that one, financial accounts for each business unit. It's also important to analyse key performance indicators. These are very important. You need to make sure you're getting key performance indicators that the responsible leader of a particular activity understands, and also that he or she is able to communicate to their team what these indicators mean. And it might mean that you arrange for your chief financial officer or a virtual chief financial officer to run a training course on the use of key performance indicators so that everyone understands how the process works. Some organizations spend a lot of money and time in developing daily, weekly, monthly reports, and no one does anything about them because they don't understand. They don't know what they're all about. The terminology is jargon as far as they're concerned. So it's very important that the leadership team thinks about this and says, we need to really sit down and talk to the recipients of these documents. So they really understand what the information's telling them. And at times you might just have to change the wording. I found that out myself. as the CFO, company secretary of a listed public company, I sat down with the foreman one day on a major meatworks that our company owned and asked them about the key performance indicator reports, and they just shook their heads and said, we don't understand what it's all about, so we don't read them. So I said, well, how about I sit down with you and we will reevaluate them. And basically, we did not change the substance of a particular report, but we changed the key words in it to words that they understood. And they then had some ownership of those reports. They were looking for them because they knew they helped them do their job. But before that, someone had just said, oh, here's some reports. No one had trained them. So perhaps in your business planning, you need to say, we're going to train people in understanding key performance indicator reports. And having done all that, we're now getting to the exciting side of a business plan. What's the vision? What do we want this business to look like in 3, 6, 9, 20 years' time? Have we got a big, audacious idea as to what we want our business to look like? And the experts say that if that big, audacious idea is that you want to be a company with a turnover up in the multi-billions, go for it. At least write it down. Then we'll start working out some strategies, how you might get there. Because that's how companies grow. Not all achieve it, of course, probably less than 0.1%, but at least they can aspire. And you might develop a very interesting company that's nowhere near $1 trillion in sales, but it might be a 20 million or 30 million, and it's a good organization, but some businesses really do grow. And that then leads to this concept of scaling up. Scaling up is a process that was based on some original work done by one of the Rockefellers, David Rockefeller, one of the founders of Standard Oil in America 100 years ago. Basically, he sat down and wrote a systems manual as to how the executives of Standard Oil would run their day-to-day activities that they were responsible for. Of more recent time, that information has all been updated to reflect the computer technology era that we now live in. And out of that has come this concept of scaling up. And a lot of SMEs around the world have signed on, in effect, to utilize this concept of scaling up. And I'm working with people that are doing that. So if you're interested in that, I'm very happy to talk to you. So scaling up's got 5 key requirements. A vision, of course. Who's the leadership team, and are they being trained and motivated? Who's the team, and are they being trained, and are they motivated? What are the strategies for this business? And we're talking about the strategies today. We're reflecting them within a business plan. Who's responsible for implementing the strategies? And as I've said a couple of times, it's the implementation of the strategies that's very important. In the business planning process, we identify the strategies under all these headings. But then 1 or 2 or 3, a group of people, and they might not be all leadership team members, have got the responsibility to implement those strategies. What sort of information report flow is going on in the organization? Is there a meeting culture? Daily, weekly, monthly? Does that process work? Is it locked into people's calendars? The meetings are going to go ahead whether you're there or not. Very important. And what about the finance? As businesses grow, they need more money. In fact, a profitable business can go broke, strange as it may seem. So that's why company directors need to be very diligent, because as you grow, your turnover might have been $2 million, and next year it's going to be $5 million, and the year after that you think $8 million. What you find is that you're spending more and more money in new premises, in new fixtures, in new motor vehicles, and if you're paying cash for them, you're outlaying cash. And you may have undertaken a major research and development activity, which even though the government will make some reimbursements to you, it's all in the future. You got to claim it the following year. And if you are trading profitably, you won't get that cash refund that I referred to before. You get a rebate off your tax, but that's all in the future. So you're tying up money. You will probably find your debtors balance has increased quite significantly because you've got more money tied up owing to you by your customers. And whilst you may think that you will also increase your creditors, basically the same proportion, doesn't always work that way, because as you're growing, some of the suppliers may impose fairly strict credit terms on you. They may be demanding payment within 14 days. And even though your customers might be taking 60 days to pay you, you've then got to finance that. So the scaling up process really requires you to examine in close detail out of the business plan and out of the predictive accounting reports, the budgets, cash flows, projected balance sheets, just where this company's going or whatever the business is, because you may have to, if you're a company, try to raise capital. And companies can now do that in Australia. If your turnover is under $25 million and your gross value of assets is under $25 million and you're not listed on a stock exchange anywhere in the world, you can raise up to $5 million from the public, but there is a process you've got to go through. And I help people on that process. If you're a young company under 3 years of age, you can raise capital as an early stage innovation company. And irrespective of how old your company is, you can utilize Section 708 of the Corporations Act, which allows a private company to raise up to $2 million in a 12-month period, but from only a maximum of 20 investors. So there's ways and means of raising money. Or you could do an initial public offer, or there are other ways of raising capital that are now emerging. So you need to sit down and think about that and say, yeah, we want to go on this growth strategy. We now need to talk to people who can assist you on that journey. So documenting the business plan, we can help you on that. We do that for clients. We assist in this whole process. We facilitate the preparation along the lines that I've talked to you today. So we facilitate the business planning process, basically act as the chair of that, talk to the leadership team and the directors. We can undertake corporate governance mentoring if that suits your organization and you want to upgrade your skills and knowledge of corporate governance. We can undertake predictive accounting reports, budgets, cash flows, and projected balance sheets so that you have got a financial picture that relates to your business plan. And we can help you with the establishment of a board of advice, if that's the next step you would like to do on this evolution journey of growing your business. And a lot of that similar material to other organizations, sporting clubs, etc., we can undertake. So our offer to you is, if you would like to do, have a Zoom meeting with me, up to 60 minutes, I will answer your questions along the lines that we've discussed today: the business planning process, the budgetary process, corporate governance, board of advice. All you got to do is contact me or my assistant, and we will organize a suitable time for a Zoom meeting to discuss the issues with you. And we can submit a proposal and a quotation for any of the services that you might like to talk to us about supplying. So if you need more information on what Towers Business Development can do, please go to our website. We've got full details, www.towersbusiness.com.au, or send me an email, peter@towersbusiness.com.au, or telephone me on 1-800-232-088. Now, I've been amiss. I haven't been checking to see if we've got any questions. I got none. I hope that means that I've answered all of your questions. But if you think of any questions later on, or as I said at the beginning, you're watching this webinar as a live feed on Facebook, or you're watching the video recording at a time that suits you better. Someone recently told me they watched my videos at 3 a.m. I hope it doesn't mean that they can't sleep. So that's about the only thing that can get them back to sleep. But if that suits you to do it, then well, good luck. But if you've got questions, please send me an email. So thank you very much for being with us today. Wherever you are around Australia, please stay safe. I hope that these lockdowns are going to end soon and you'll be able to get back to running your businesses very efficiently and meeting the challenges that are still going to be around for the next 2 to 3 years and surviving in your businesses. So thank you for being with us, and I look forward to talking to you when we run our next series of webinars within Towers Business Development in a couple of weeks' time. So have a great day. Goodbye.